Bob Alderman, gold got a nice little bounce last week because Fed Chair Janet Yellen decided to stay dovish. Is this the start of something bigger?
Well, Greg, we're not sure if it's, no crystal ball here, not sure if this is the direction that we're going to see on a go-forward basis. We do appreciate the fact that quantitative easing is occurring all over the world and, on the heels of what has happened here in the United States, a flood of liquidity in the markets. So we think the prospect for gold going forward is a good one and a bright one.
Well, the dollar's strength has really kept a lid on gold here in the U.S., but outside the U.S., when you look at Europe, the euro, and the Japanese yen versus gold, it's done pretty well.
Absolutely. It's done wonderfully well against currencies all over the world. And in fact, even here in the United States, one would have expected, with the dollar being as strong as it is, and with this whiff of higher interest rates on the forefront, that frankly gold would be in a lot worse shape here in the U.S. than it actually is.
Well, gold's flat, but the miners, when you check out the GDX, they've done awfully well this year. So why don't you talk about good old supply?
Well, we definitely see the miners under pressure. I mean, with gold prices right now at, call it $1,200 an ounce, and with mining excavation being somewhere north of $1,200 an ounce, it doesn't take a rocket scientist to understand that they're going to stop mining if price doesn't go up. So there is going to be a supply squeeze, we believe, on a go-forward basis, and demand, frankly, is up all over the world. So it's all looking quite favorable for price in the future gold markets.
And can you quantify at all the geopolitical premium? There are problems in the Ukraine, although they've died down lately. Keep hearing about ISIS in the news. Where is that when it comes to gold?
Yeah, the geopolitical and economic premiums are huge right now, and we think that it's only a matter of time before people really start to understand what the impact of those things are going to be on the economies around the world.
If you were to assign a particular amount of someone's portfolio that should be in gold, would it be 5% or gold and silver? Why don't you talk about where it should be in someone's portfolio?
I think for a high net worth investor, typically around 5% is a good place to start. Anything less than 5% becomes somewhat incidental to the overall portfolio performance. North of 5% would be someone who is maybe a little bit more on the concern side about the economies and geopolitical things that are going on around the world right now.
And then at GBI, you like physical gold as opposed to an ETF. Talk about the benefits of physical gold.
Well, with physical gold, there's no hypothecation, no lending in the way we offer physical gold at GBI. So, it's a pure play, no counterparty risk, and something that I think clients, from an emotional perspective, like knowing that they own the physical asset, not the paper asset.
All right, thanks a lot, Bob.
Thank you.
Thank you for watching The Street.